Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Two out of the three central banks have met. One has caused some large moves, while the other has mostly been as per the script. Bank of Japan raised their benchmark interest rates to 0.25%. Previously, the interest rate ranged around 0% to 0.1%. The Fed, meanwhile, stuck to the script as per the wide market expectations, maintained rates at their current levels. Now, what's important for us to understand is Mr. Powell's commentary. Good morning, JK. It must have been a very busy day for you yesterday. Can you please break down yesterday's event for our listeners?
Hey, good morning, Saurabh. Yes, it was indeed a busy day yesterday because action started even before the BOJ, decision started with Australian CPI, which came softer and led to the interest rate expectations completely taking a U-turn. Market was expecting a hike by Australian Central Bank in the next meeting, but now it has turned into more of a dovish approach, and possibly a next move will be a rate cut by Australian Central Bank. Now back to BOJ. So what we saw was a confirmation that actions speak louder than words, because we know that BOJ has been intervening and making several statements about weakness in yen, but it was actually when they moved on the rates, which is the main factor behind the yen's weakness. It's huge differential with the US, leading to, in fact, with other countries as well, leading to big carry play, selling yen and buying other assets. So when they hiked the rate yesterday by 0.25%, to the surprise of many in the market, that actually led to dollar yen falling big, and we saw a high of 153.90, and then we also saw 148 half today morning. So that's the kind of impact that the rate move has had on the Bank of Japan. Now, what was helping their cause was also the fact that Fed is on the path to cutting rates. We'll come to Fed later, but then Bank of Japan's efforts in getting the yen stronger, which was actually leading to the consumption getting affected in the economy, was given a boost when the Fed indicated a possible rate cut in September. So, of course, the yen move also brought down the dollar against yuan, in turn helping the Asian currencies. So what is ahead for yen is that the Bank of Japan chief has actually sounded hawkish even in his press conference, and they are not averse to making more moves on the policy if it is warranted, and also they are likely to taper the QE also in the coming months. So overall, it was a good session for the yen bulls, and possibly having broken 150 psychological level, we are headed towards 145, where the Bank of Japan would like it to stabilize. Now, on the Fed meeting, of course, there was no surprise. If you it was perhaps the worst kept secret on the planet that the Fed was not going to cut in July. But if you look at the press conference, Powell was more explicit and saying that the policymakers were getting closer to a point where they could reduce rates, but they were not quite sure that they were there yet. So basically, conditions have favored a rate cut, but they don't want another surprise in the lead up to September. That's why while they are saying a possible move in September if conditions don't worsen, that's the message that we have got. Again, there is no answer to the market's presumption that there will be 3 cuts during the year, but those discountings in the market has not changed 100% probability of move in September, 70% in November, and similar percentage in December as well. Total of 3 cuts. But Fed wants to be cautious, still data dependent, but subject to all that, a September move is what they have put on the table. So that is a key takeaway from the US Fed policy statement yesterday. Of course, many of the Fed statements were tending more towards dovishness. Once again, Powell reiterating that they don't want to move too early. At the same time, they don't want to delay the move also too much. So it's a balanced but more dovish statement with the market took with both hands. Now, if you look at the market reaction, yields fell substantially, almost to 6-month lows in, or rather the year's low was in sight for both 2-year and 10-year yields. The boost for bond prices was also given when the Treasury from US came and announced that in the coming quarters, they are not likely to increase their refunding or the fresh issuances of Treasury bills. And that really set the ball rolling for yields to fall to the year's lows. Yes, the initial part of the day, we did see some yields moving up, that is after the BOJ rate decision. But overall, there is a sense of people preferring bonds because of the rate moves that are ahead from most of the central banks, including UK, which is meeting today. And the probabilities are now up to 70% for a UK rate cut today. And that won't be a big surprise, definitely for the markets. On the stocks, again, a big positive reaction from Nasdaq and S&P 500. More, I would say, equally due to the dovish statement, as well as because of the fact that market had gotten quite a bit sold in the last few days, and also the corporate news from NVIDIA also helped for the Nasdaq rallying, because NVIDIA shares itself rallied 14%. All that helped the stock market to perform well. That has not carried into the Asian markets, because Japan is down more than 2%, and even Australia and the other Asian markets are also somewhat subdued compared to the big rally that we have seen in the US market. On the dollar, obviously, yen was the biggest gainer yesterday after the BOJ move. For other currencies, they are still in the familiar ranges, because while Fed's dovishness might be a trigger for more weakness, the sell in the yen crosses has kept them in the range. So it's actually offsetting the tendency to gain in these currencies, excepting yuan, which has gained because the differential with the US has narrowed down. And then, of course, looking slightly ahead, we have the uncertainties of US elections, the policy and the political uncertainty, as well as geopolitics, which keeps lingering, after the Middle East tensions have escalated in the last few days. GBP may come under more pressure if there is a rate cut, because it is slightly overbought, as well as GBP yen cross might be, seeing a good profit taking, because Japan is high rate and UK is cutting rate. Again, the differential coming down. Eurozone data is not so encouraging for the growth, but at the same time for inflation, it is slightly on the higher side. It's putting ECB in a bind because the growth is not picking up as much as they would desire, but inflation is also not coming down. So that is something that they will be mindful of, because Germany is almost like in a stagflationary situation. On the commodities, there was a good rally with the risk-on sentiment re-emerging. That helped Aussie and Canadian dollar also go up. Amid all this, rupee remains a picture of stability. You had a move once again of just 2 paisa despite a month end, and no much reaction to yen and yuan moves, and even the Fed moves as well. There were talks of some big corporate fundraising money being sold in the market, but even that was well absorbed, clearly indicating that rupee is not yet ready to make a move, but continues to trade on the weaker end of the range. Thank you.
Thank you, Rick. And it was an eventful week today, this week, and starting with the BOJ, the central bank moved on the rates. For some time, officials have been quite vocal about the weakness in yen. So finally, as JK mentioned, action speaks louder than the words, and that's what happened. That can pretty much summarize what happened with the BOJ meeting. The yen appreciated big time against the US dollar, trading below the 150 mark. Even the Fed's somewhat dovish commentary about a possible cut in September led to this added yen strength. But the commentary definitely has changed. Powell saying conditions are favorable for a rate cut if conditions don't worsen. So sort of this cautious stance, keeping the door open in case they don't want to cut because the data has not worsened. Data has worsened. I mean, yields fell substantially towards the year's low, and today we have the UK central bank meeting. The probability is up to 70% for a rate cut today by the BOE. For rupee, we remain stable in a 2 paisa range and no much reaction to Fed or the BOJ. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.